Hi everyone and welcome to Learn Accountancy. In today's session, lecture 6, we will be learning about audit and fraud. So first of all, we will understand why we need an audit. Because shareholders appoint directors to run the day-to-day operations of the business. How do they know or that the directors are running the company properly, right? Directors produce set of year-end accounts known as statement of financial statements. Independent auditors are appointed to check the statement represent a true and fair view of the company's current financial position. So that is the exactly what we should be knowing about audit and fraud. So let's go and unfold the detail of what does audit look like and what are the key things that we should be aware of. So first of all, what does true and fair means? External auditors check the financial statements to conclude that these are true. That means the statement of financial position are more or less financially accurate. The statement could be arithmetically correct, but do they give the exact impression of the company's financial state? Okay, so basically the auditors are trying to find out if there are any errors or frauds or any kind of manipulation, through their experiences and judgment. And fair mean that it is not misleading, because we know that because of globalization there are like larger shareholders from across the globe that rely on the financial statement presented on the stock market. That is why it is important that each and every shareholder receives fair amount of information which is not misleading. So what is the role of auditor? Let's have a discussion on that. First of all, they have to check the accuracy and fairness of the financial statements, examine the internal control systems are operating effectively, examine the transaction that happened during the year, report any anomalies in transaction to the management, and produce report to the management on their accounting procedures. UK accounts regulatory system looks like, it's a combination of a company law, accounting standards, urgent issues task force, financial reporting review panel, international accounting standards board, European law, and GAAP. So there is a case study on Guardian based on Carillion, which can be considered as a task to be completed by yourself, and then later you can drop into the resource section of this course, so the peers can also have view of what is your ideas about it. Internal controls refer to collection of mechanism by which companies try to ensure all its transactions are properly authorized and recorded. Its assets are safeguarded. Okay, as you might remember from our earlier session, that corporate governance, is all about safeguarding the shareholders' assets. So you can see auditing and internal auditing also plays an important role in reviewing and scrutinizing role of the company. It is also part of a corporate governance to have a good internal control system in place and ensure the stewardship duties of all transaction and employees are exercised correctly. The framework of controls can be seen here. First of all, there should be a control environment, control procedures, risk assessment process, information and communication process, and processes for monitoring the continuing effectiveness. Inherent limitations of internal control system are basically cost versus benefit. First of all, we have to identify if the activity is worthwhile or not, potential for fraud and human errors, employee collusion, and bypassing overriding the management. Because what is the problem with internal control is that since it's internal to an organization, so there is a high chance or high probability that these controls can be bypassed. Let's have a look at what are the internal control environment and procedures. Internal control environment is based most upon philosophy, like I told you earlier also when we were learning about culture, that it's the top-down approach. Like usually you can see at your home, if your parents are strict, so that kind of culture is followed. If they are more friendly and familiar, so the suitable culture is being followed. So the most important thing to set the control environment is philosophy. What does the top management think about internal control? And then see the management style, their strategy, culture, and ethical principles. Control environment procedures are mainly focused on preventing, detecting, and correcting the error and frauds. So what is the internal auditor's role? You can see that depends on the scope and priority of identified risk, conduct risk assessments from which they will recommend an appropriate framework. The key feature of good internal audit is independence from whom they are reviewing and appraisal review work rather than do it. Right? So they are trying to review the work rather than doing it themselves. It's kind of a check and balance or reconciliation or reperformance and all. So you can see here a quote, you are sure you have conducted an internal audit before, right? So it shows an impression of how the internal audit is being conducted. Internal audit and internal controls can be seen here on the screen, which assesses the effectiveness of controls. So you can see they are reviewing systems, examining the information, review of EEE, external audit experiments, compliance, asset or safeguarding review, corporate objective implementation review, monitor risk and strategies, and special investigation. These are the types of tasks which might be conducted by internal auditors. So what are the types of audit that we have is mainly operational, a value for money evaluation, okay, whether it is uh, worthwhile to invest or not. Systems, looking at compliance and substantive test, going in detail and finding out whether the system and softwares are working. Transactions, detection of fraud using substantive test. Now, substantive test, there is another word also for this. It is known as a test of details. Social audits and management investigations, that can be any kind of investigation. Okay, what if the external auditor is relying on the work of internal auditor? So there is a much wider scope, but what we have to see before we rely, their status, scope of work, technical competence, and due and professional care. Physical access controls are also available, when we are talking about internal controls. For example, to prevent intruders to access the IT system. For example, security staff, door locks, keypads, or entry systems, and intruder alarm. So this all basically are the types of physical access controls that prevent frauds. My computer doesn't work, the hard drive crashed, what do I do? Did you back up? So see, this is also a type of a control whereby you have to prevent the information from losing it. Why is it gonna blow? So you can see that it's a good illustration to understand. Okay, what are the integrity controls? Input controls, ensure accuracy and completeness of transactions. Backup controls maintain data, okay, through backups and restore process. Administration controls are basically careful selection of personnel. Contingency controls are basically what are you going to do? What if this happens? What if that happens? Backup and archive. A well-planned strategy should include offsite storage and backup, regular backup of critical data, archive plans, disaster recovery plan, and such backups to prevent the loss of data. So the fraud triangle, you can see that how does the fraud happen. So first of all, there should be an opportunity, and then together with that there should be an incentive. If someone is looking an opportunity and incentive to be rewarded in some way, and then their attitude and their moral values. So you can see if it is a combination of all these three things, that will lead to the fraud. So Fraud can fall into one of the two main categories. It can be either removal of funds or assets or misrepresentation of the data. Both can be considered as fraud. Okay, what are the implications of fraud? Immediate financial implications will be there for sure, and then long-term effects on a company performance might be company will start performing poor after the commitment of a fraud. Intentional misrepresentation of the business financial position, excessive distribution of profits, retained profits will be lower than believed, incorrect decision will be made, and impact on stakeholders and investor suppliers. So we can see that basically this is how the implications of the fraud that may affect the business. So how do you know that there is a high risk of a fraud? First of all, there will be a lack of integrity, excessive pressures, poor control systems, unusual transactions, and lack of audit evidence. So these all things will give you hint that there may be chances of high fraud risk. How do you assess the risk of fraud? External factors, example, general environment of the business, nature of the industry, and then internal factors like if some new person has joined or there is a rapid growth. So usually there can be a misrepresentation of information. So the types of risk to be include are business risks and personal risks and IT risks. So you can see that business risk maybe losing a customer or relying on a customer or supplier, loss of a key staff. So all this basically comes under the business risk that affects your profits. Personal risk maybe staff turnover or labor turnover and their idle time and all sorts of things. ID disk is again where you lose the data, there is no proper backup and securities or password protection in place. So systems for detecting and preventing fraud is very integral part of a corporate strategy, and control system has to be designed to detect and investigate fraud. Okay, so general prevention policies include emphasizing ethics, personal controls, and training and raising awareness. So responsibility for fraud detection and prevention, you can see that it is the director's responsibility, okay, to ensure that controls are appropriate, ensuring financial information is reliable, and it's the external auditor's responsibility to design suitable audit procedures, document it, and qualifying an audit report if necessary. So that's the end of the session, and thank you all